speaking about Brazil specifically and about the infrastructure needs, and His Excellency the Governor spoke about that, there is a broader issue and a broader opportunity around the emerging markets in general, or what we like to call the growth markets. And it's around the huge investment that is actually needed in infrastructure. And we saw the earlier presentations from McKinsey around this that were flashing on the screen. And it's not just Brazil, and it's not just the growth markets that we sometimes tend to think of in terms of the BRICS. There's a whole world out there that's beyond the BRICS of large economies that are increasingly connected, that are growing at fairly rapid clips, and more importantly, are driving global growth. Today, these economies are driving about 2/3 of global growth, so they're expected to take over in terms of their share of the global economy within a couple of decades. And these economies actually have been growing at that clip despite a huge underspend in terms of infrastructure, and an infrastructure that, frankly, is going to be a bottleneck in terms of their growth and taking them to the next level. And just looking at this slide that I've put up in front of you, you can see what we're talking about here. And I think the number that McKinsey put up was 57 trillion in terms of infrastructure need globally by 2030. So there's a huge spend that's needed. A lot of that is going to be in these markets. There's also a cost to not having that infrastructure developed, to not having that infrastructure in place. It's a substantial cost, and we see it today across a lot of these markets. When we look at how many people around the world today don't have access to electricity or adequate sanitation, these are huge numbers, and these are most of these populations are in these growth markets. So the key bottleneck is going to be around infrastructure. And I think one of the themes that we feel is probably the most pressing is around energy and the infrastructure around delivering energy and connecting the supply and demand around energy into these markets specifically. And the consumption of energy is increasingly, again, coming out of these markets. And interestingly enough, again, a big part of the supply of that energy comes from these growth markets, but it's the connectivity that's not necessarily happening. And this massive demand and surge in energy is happening because of a number of factors. One, urbanization. We're seeing the emergence of major cities across these growth markets. And I guess, again, going back to McKinsey, there's a lot of research around the emergence of cities and how there's 400 cities around the world that are going to be the center of economic activity. So with this increasing urbanization, we're seeing more and more demand on energy. With increasing industrialization, again, we're seeing more and more demand on energy, and a disproportionate amount of that is happening in these growth markets. And today, if we look at it, about almost a decade ago, the overall consumption or overall global energy demand from these growth markets overtook that of the developed markets. And we will see that by 2030, the consumption from the growth markets will be double that of the developed world. And looking at that, we look at the USA on the left-hand side of this chart with probably 5% of the world population consuming about 20% of the generation capacity. And we look at, if I look at the right side of the chart, South Asia, the Indian subcontinent, and sub-Saharan Africa, that's about 30% of the world population consuming less than 7%, or having the generational capacity of less than 7% of global capacity. So there's a whole sort of snapback factor that will happen there, and it's a significant investment opportunity if one were to get it right. And just going back to that slide very briefly, I think, just anecdotally, you look at the entire generating capacity in a country the size of Nigeria, that's 3,000 megawatts. Our own portfolio, and we're not dedicated energy investors, has more megawatts of generating capacity. And I think the interesting thing is we're seeing that a big part of that energy will come from renewables, because frankly, that energy is needed at any cost, and increasingly, the cost of renewables, specifically in these markets, is making it tangible and realistic as a solution. And we've seen that in those markets, the spend over the past decade has gone by multiples, whether in sub-Saharan Africa by 20 times, whether in China by 25 so times in terms of the spending on or investment in renewable generation capacity. Going back to the supply side and hydrocarbons specifically, again, interestingly, close to 60% of proven gas reserves exist in these growth markets when you look at this map. But the challenge is all of the midstream infrastructure that's needed to channel it to where it's needed most, which is within those markets as well. So again, I look at this map, and I'll just click through these slides very quickly given the 10-minute time limit. The reality is the infrastructure is lacking all across these markets. In a lot of these markets, it's being trucked, it's being transported across landlocked countries with very traditional means, which is probably not the most efficient way to do it. You could do it at a fraction of the cost if you invest in the right infrastructure around pipelines and all of the infrastructure around that. And here, if we look at the actual value chain, there's a lot of activity happening, especially with shale and all that around exploration and production. But the bottleneck and the key challenge is going to be around the midstream, downstream, and power opportunities that you see in the slide in front of you. So governments recognize that across these markets. I'm not talking about governments in the developed world. I'm talking about governments specifically in these growth markets, and are increasingly focusing on creating the right regulatory environment in terms of encouraging private investment in the sector, and encouraging actually investment specifically in renewable energy in that sector. And we can see how there's a significant improvement in terms of the regulatory quality in these markets. But the big challenge, and I think earlier when we were having the debate before the panel started around some of the challenges in infrastructure, is this big macro 57 trillion opportunity translating into actual investable ideas and the execution. And I look at it from the perspective of an investor such as ourselves. I think increasingly delivering the micro opportunity and translating that big picture into specific opportunity with returns requires, especially in these markets, requires a certain toolkit. And that toolkit is highlighted here in front of you. It's around understanding that infrastructure is a local play. You need to be in the markets, understand the demand and supply dynamics, understand the regulatory environment. You need to have access to world-class expertise in that specific sector and the operational expertise. It's even as an investor, it's not just about pure financial investing. It's around having the knowledge and having the knowledge to bring the right partners into these markets, and having the ability to understand that the opportunity is going to be, to a large extent, a greenfield opportunity, and being able to price that and manage that. And also being able to be flexible across the capital structure and play within that. And going back to the local issue, the fact that being able to recognize the right local partners as well, and manage the counterparty risks and other risks that come from investing in these markets. I think if I leave you with one thought, and I think it was John who mentioned on the panel around creating sustainable and inclusive growth, these markets, if you want the right income equality, if you want to create the right jobs, you need to continue to grow at 5, 6, 7, 8% to absorb the demographics around the people that are entering the job market in these countries. And if the investment in the energy infrastructure is not made, that may be the single biggest challenge to these markets. I'll leave you with that. Thank you very much.